Ever walked into a bank thinking you're just going to open a simple account and ended up feeling like you just failed a pop quiz on financial jargon? You bring your ID, flash a confident smile, and suddenly they're throwing words like overdraft, maintenance fees, minimum deposit, and APY at you. It feels less like opening a bank account and more like trying to decode an alien language. And worst of all, one wrong choice now could cost you hundreds of dollars later. But what if you knew exactly what to say, what to bring, and which bank account would actually work best for you before you walked through those doors? Let's break it down together, step by step, so by the time you're done watching, you'll be more prepared than 90% of people walking into a bank for the first time. Number 1, pick the right type of bank. Yes, there are options. This is the decision most people regret later. There are big national banks, small local credit unions, and digital-only banks that have no branches at all. So what's the difference? Big banks usually have more branches and ATMs, which is great if you like human interaction, but they also tend to have more fees and lower interest rates. Credit unions are member-owned, often friendlier, and usually offer better loan rates and customer service, but may have fewer branches. Online banks? They often win on interest rates and lower fees, but everything's done through your phone or computer. Example, Kevin opened an online bank account while working part-time in college. No branch visits, no fees, and he earns over 4% interest on his savings. Meanwhile, his roommate pays a $12 monthly fee just for using a traditional bank. Number 2, know what type of account you're opening. Here's where the confusion starts. A checking account is for everyday use. That's where your paycheck lands and where your debit card pulls money from. A savings account is where your money grows slowly but safely. You want both. But here's the trick. Not all checking or savings accounts are equal. Some offer cashback rewards. Others charge you for writing too many checks. Some freeze your savings if you dip below a certain balance. Tip: start with both, and make sure you ask about limitations before signing anything. Number 3, gather the right documents or get turned away. You'll need at least 3 things. A government-issued photo ID like a driver's license, your social security number, and proof of your current address. That could be a utility bill, lease, or even a pay stub. Pro tip: if the address on your ID doesn't match your current one, the bank might reject your application or put it on hold until you can prove where you live. Number 4, check the minimum deposit requirement. Some banks will open an account with $0. Others require $25, $50, even $100 to get started. What's worse, if you don't meet the minimum later on, they might start charging you monthly fees or shut down your account. Example, Emily opened an account with a $50 minimum. She started with just $20. The bank opened the account anyway, then charged her a $15 penalty the next day. Ouch. Number 5, watch out for sneaky monthly fees. Some accounts come with a monthly maintenance fee. This can be $5 to $15 per month. It's up to $180 per year just for the privilege of holding your money. No thank you. But here's the twist. These fees are usually waived if you meet certain requirements, like having direct deposit or keeping a certain balance. Tip: ask about fee waivers and get it in writing. Number 6, understand overdraft protection. It's not always a good thing. It sounds helpful. If you try to buy something and your account doesn't have enough, the bank covers it. But that $4 coffee you bought might cost you $40 if the bank hits you with a $36 overdraft fee. Example, Jordan's debit card worked at the gas station, even though he was $2 short. The next morning, his account was negative $38. Thanks. Overdraft protection. Number 7, look for special accounts if you're a student or teen. Many banks offer student or teen accounts that skip the usual fees, don't require minimum balances, and include budgeting tools. Example, when Amanda turned 18, she opened a student account that gave her a $50 bonus and a free budgeting app. No fees, no hassle. Number 8, make sure the bank has a good mobile app. If you're like most people, you're not going to a branch every week. You want an app that lets you deposit checks, send money, pay bills, and check your balance in seconds. Pro tip: Check the App Store rating before signing up. A 2-star app will make your banking life miserable. Number 9. Know your ATM options. You shouldn't be charged to access your own money. But if you use an out-of-network ATM, you could be charged twice, once by your bank and again by the ATM itself. Solution: choose a bank with a large ATM network or one that reimburses ATM fees. Example: Chris switched to an online bank that refunds up to $10 per month in ATM fees. Now he never thinks twice about which ATM to use. Number 10. Pay attention to interest rates. Most checking accounts don't earn any interest, but savings accounts, some are as low as 0.01%, while others, especially online, can be as high as 4%. Example: saving $1,000 at 0.01% earns 10 cents in a year. At 4%, that's $40. That's like getting paid for doing nothing. Number 11. Beware of too good to be true bonuses. Banks love to lure new customers with flashy deals. Minus $200 just for opening an account? But read the fine print. They usually require you to deposit $1,000, set up direct deposit, and keep the account open for 90 days or more. Miss one step, and you don't get the money. Example: Ben opened a bank account for a $250 bonus, but didn't know. He needed 3 qualifying deposits, got nothing, and was stuck with a $10 monthly fee. Number 12. Think twice before opening a joint account. Joint accounts sound great for couples, roommates, or even parents and kids. But remember, either person can deposit or withdraw the full amount at any time. Example: Samantha and her boyfriend opened a joint account for rent. When they broke up, he cleaned it out, $500 gone overnight. Number 13. Don't overlook customer service. You might not think about customer support until something goes wrong. But when it does, you want someone to answer quickly and solve your problem without transferring you 10 times. Pro tip: before choosing a bank, call their support line. If you're stuck on hold forever, that's your warning. Number 14. Make sure your money is safe. FDIC insurance. This is huge. The bank you choose must be FDIC insured. That means your deposits are protected up to $250,000 in case the bank fails. It's peace of mind. Without it, your money isn't guaranteed. Example: when some regional banks collapsed in 2023, customers at FDIC-insured banks were protected. Others weren't so lucky. Number 15. Practice good security habits. Banks can protect your money, but only if you protect your login info. Use long, unique passwords. Turn on 2-factor authentication. Don't share your account details. Example: Marcus shared his banking login with a friend to help split bills. That friend later took out $400 without asking. Legally, the bank couldn't help him. It wasn't fraud if he gave permission. Number 16. Always read the fine print, even if it's boring. Banks send you updates through email or your mobile app. If you ignore them, you might miss fee changes, new requirements, or even policy changes that cost you money. Number 17. Choose a bank that can grow with you right now. You might only need a place to keep your paycheck. But in 5 years, you might want to start investing, apply for a home loan, or open a business account. Choose a bank that offers those options so you don't have to start from scratch later. Example: Dylan started with a simple checking account. A few years later, he launched a freelance business, and his bank offered him business tools, accounting help, and tax tips. It's all under one roof. Opening a bank account is a rite of passage, but it's also a big financial decision. You're choosing a place to hold your money, your trust, and your financial future. The good news? You now have the tools to make that decision wisely. Which part of opening a bank account do you think people underestimate the most? Let me know in the comments side. Love to hear your take.